Welcome back everyone. This is a brief update for the gold market. Today's title, A Good Landing, is one you can walk away from. Gold prices continued their downward movement yesterday as the fundamental news supported the notion of a risk-on appetite for investors, giving them the opportunity to turn their attention to other instruments. However, this report aims to provide a brief update on news and aspects of the market that could affect gold and also the possible scenarios looking forward. Making a start with the news from the US, as they significantly affect gold prices, which are denominated in US dollars. Last night, Fed Chair Powell's comments provided further confidence in the US economy, as he noted that he sees the glass half full and could be filling up further. The US had some very good financial releases last Friday that came out very strong and surpassed market expectations, providing more assurance for US dollar traders to enter long positions. This outcome may have followed us into this week's trading sessions where gold short positions exceeded and evidently put downward pressure on the metal. This all adds up to the general sentiment of the market currently, where gold is steadily heading lower. On the other hand, according to a Goldman Sachs analyst and comments he made on Bloomberg, the US dollar continues to be driven by various forces at the moment. This could be a message that some positive signs from US financial data and positive developments on the US Sino front may not be the full picture. Traders must be aware that the US dollar maintains the volatility to throw surprises or hurdles for traders. On a separate note, things are looking much brighter on the US Sino front. Both sides' officials have confirmed a telephone call has taken place between them, and many speculate that they are getting closer to signing a phase 1 deal as obstacles are being removed. Even though gold reacted to the news yesterday and left behind some ground, we do not think gold traders trust the sentiment 100%. In our view, locking the phase 1 deal would have a significant effect on the shiny metals prices. What we saw yesterday was, in our opinion, a minor reaction. The trade barrier does not concern only US and China, but the whole world, and so the importance of signing a phase 1 deal will be appreciated globally. If a deal is signed, then gold, in our view, will be among the instruments that could produce substantial volatility. So gold traders with big money may be waiting for confirmation of the deal prior to trading. Upcoming events that could move gold prices, in our opinion, could be today's consumer confidence and new home sales from the US, both released in the American session. Also on Wednesday, we get from the US the durable goods, the second estimate of the GDP growth rate for Q3, the pending sales change, and last but not least, the core PCE price index, which the Federal Reserve pays particular attention to. However, and regarding Wednesday, due to the fact that different releases are coming out simultaneously, we would advise traders to be aware of mixed financial data that could lead to numerous outcomes. As a conclusion, we would like to state once more that gold trends are broken and reversed very fast, and traders involved in medium to long-term views should keep this in mind. If you're wrong or if you're right, you will notice quite fast, as gold had the characteristic of making large moves in small time frames. So better to lock profits in and cut losses short on either side. Moving to our technical analysis, since our last report, gold has broken above our 1470 resistance line and at some point even approached the 1480 resistance level, however was unable to surpass it. If the precious metal has a strong enough buying momentum to surpass both of our pre-mentioned levels, and then the next stops could be the R3 1490 or even higher the R4 1500 US dollars, both last seen on the first week of November. In the opposite direction, and if traders favor a selling trend, the first level that could be tested is the S1 1450 that was previously seen on the 12th of November and was almost reached yesterday upon the release of the phone call between the US and China officials, which implied the reaching of a deal. This is evidence of how fundamental news affect the technical side of gold. Then again, if the S1 is broken, the next stops below could be the S2, the 1440, or even the S3, 1430. However, final announcement could even send the precious metal significantly lower to our S4, 1413 level. The RSI indicator, just below our chart, is evidence of the selling momentum taking place in the latest sessions. Yet it also indicates that the trend could be in for a reverse. If you heard something in this report that you found useful, just make sure that you apply it to your trading. That's the whole point. Thank you for your time. See you next week.